Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I want to dive in to this interesting article that came up on my timeline today. And this is from Blockworks. So we do see digital dollar may trigger bank run into CBDC, Treasury official. We do see there are still no formal plans for the US digital dollar, with the Treasury continuing to explore what a CBDC might look like. We scroll down here, we do see that the US Treasury has been actively looking into how to make the most of a potential digital dollar, taking into account both national security and privacy. We do see that Graham Steele, a Treasury official, said at a payments conference in Austin, Texas on Tuesday that the US has not made a firm decision on whether to pursue a central bank digital currency. What do you see? A CBDC is a digital version. They just kind of talk a little bit about CBDC. And then down here, we do see a retail CBDC could contribute to a more competitive and innovative payment system, support financial inclusion, and help preserve the face value redemption of the currency. Don't you just love how they try to upsell this for the retail sector? To make sure that, hey, look, it's great. You know, you need to have a CBDC, which I'll talk to you guys a little bit about here in a second. They also talk a little bit about offline transactions. Why would we need offline transactions? Oh yeah, that's right, a global cyber attack's coming, right? Then banking system could be sensitive to a CBDC rollout as well. And we do see that he's quoting, or I shouldn't say quoting, but he's talking about the downfall of Silicon Valley Bank. And then also First Republic, Signature, and Silvergate. As we have seen in the recent episodes of banking turmoil, a combination of technology, highly concentrated depositor base, and access to non-deposit alternatives outside of the banking system may have changed the nature and speed of bank runs. And we do see, with the technology enabling the movement of deposits only getting faster, there could be additional risk associated with the introduction of CBDC. You don't say. And they also talk a little bit about how a digital dollar might protect privacy. Kind of comical, right? But I thought this was very interesting because this is what we talked about back in March. In fact, there was a video from Caitlin Long. Shout out to Crypto Airy for posting this back in March. But we do see the FedNow instant real-time payment service going live in July. Zero acknowledgement that the speed of settlement will increase bank run risk inherently. They don't get it yet. This is from Caitlin Long. We used this video twice, I believe, in the past. This goes back to March 17th, right after the bank runs.
And if you look at the balance sheets of the banks, virtually none of them are sitting on enough cash to back demand deposits that can be withdrawn at the speed of minutes now. So here's the thing. It used to be you had to go to a bank branch and fill out a paper form to make a bank withdrawal. Now you can do it on your phone. What's interesting is that the bank regulators have for a long time hated the most tech forward banks. They like the concept that everything has to be analog because it slows everything down. Just yesterday, the Fed confirmed that FedNow, which is the new payment system that is ultimately going to replace FedWire, is coming online in July. And it's a 24/7, 365 system. And there was a lot of information in the press release about the testing requirements that the banks that are going to be rolling it out in July will have to comply with. There was zero acknowledgement that the speed of money movement is going to increase inherently when you get a real-time system. So we were talking about how long it takes for you to put the payment instruction in, analog versus online banking or API. But now there's also speed up of settlement once the instruction is received by the bank. And that is going to be real time. Now, FedNow only limits you to $100,000 at a time, but $100,000 at a time equals increased bank run risk inherently. And I was floored that the Fed said nothing in that press release about requiring the banks that are going to be offering FedNow to hold more liquidity. It means they don't get it yet.
So yeah, today more than ever, this is continuously becoming a big deal. And I think that as we come down the wire on this launch of the FedNow service, It begs the question, is this by plan? Are they trying to collapse the system? Are they trying to invoke a massive bank run so that they could usher in a CBDC system? We have no idea, right? But that's what I believe is going to happen. And that's what my thought process on this has been since going all the way back to March. It's significant to note this because guess what? The banks are not safe. I don't know who needs to tell you this for most people to believe it, but the banks were never safe. They weren't safe back in 2008. They weren't safe 10 years before that. They weren't safe 20 years before that. They were never safe because guess what? You know how we always say within crypto, not your keys, not your crypto, with exchanges? Well, guess what? That's how a bank is. A bank is only good for exchangement of money. Meaning when you go to a bank and you want to deposit money or you want to, withdraw money, hey, they're great for that. But are they supposed to be a place where you store your wealth? Absolutely not. Because you can never trust a bank. They're only insured up to $250,000. And even then, I've talked about it in the past, there's secret initiatives happening around the FDIC where they will bail in banks, whether it is $5 in your bank account or $5 million. Meaning, guess what? That $250,000 idea around insuring your money, it's nonsense. So banks are never going to be the safe route for storing your wealth, and you need to make sure that you are not storing your life savings in a bank account. Also, FedNow instant payments are about to unlock fintech investment opportunities. Well, I love that. I absolutely love that. I love that, the FedNow instant payments are so great. They are going to spin this with CBDCs as well. They try to sell this to everyone. They say that, oh, this is the greatest thing ever. CBDCs are the same thing. They are catering it to the retail sector. You can make payments instantly. They're so much cheaper now. And, there's this, there's that, there's blah, blah, blah. They continue to sell this to you. Why do you think that they're catering it in the way of, oh, it's a lot more secure. It's a lot safer now. We need to utilize this so that we can counteract what's happening outside of the US because all these other nations are moving forward on a CBDC system and this and that. It's all ways to sell it to the sheep. You need to be open to what is actually happening here. Open your eyes and understand that they are lying to you. Why do you think that there's these things coming out around the Fed, right? This got posted back in March, I believe, or it might have been March, April or so. Or yeah, it was actually April 11th. So this is talking about, is FedNow replacing cash? Is it a central bank digital currency? Why would they have to, talk a little bit about this? Why would they have to make this announcement? I can tell you why. Because guess what? They're lying to you. They're saying, no, FedNow is not related to a digital currency. And no, it's not, right? Like, this is probably the only truth within this. It's not related to a digital currency, meaning guess what? It's not exactly a CBDC. But what this will do is be the accelerant for a digital currency. What we are going to see is this collapse the traditional banks. They're going to say, okay, well, this doesn't really work with fiat currencies. We need to have a CBDC system so that we can track and trace all of the withdrawals and the deposits and make sure that we are, prepared for the risk. They're going to sell it. They're going to sell it to the retail sector. And I guarantee you that from the FedNow system, we will see a ton of discussions. We will see so many headline articles about a CBDC system, about, how we need to have this upgrade around our system. It's going to be a big discussion. And in fact, there's a ton of PDF files already on this subject as well. And we do see over here as well, this was from May 2nd. Again, why do we have to have these articles? Unless they are trying to tell us something that they're really not. What do you see? FedNow won't give agency power to seize bank accounts for political beliefs. Oh, how comical is this? The reason why they brought this up is because there was banks out there actually denying customers because of their political beliefs. Can you believe that? But oh yeah, I'm supposed to trust a bank with my wealth, right? Absolutely comical. Also, Peter, I told you guys to go check Peter out over on Twitter as well as on YouTube. Incredible individual. Love his ideas around a few things. But you see, Fed wants to lock you into a failing bank. Listen closely to this.
A growing chorus is warning the next stage in the bank crisis could be freezing your bank account to save dying banks. As Luke Groman put it, that they, quote, chain the theater doors shut before lighting it on fire. A few weeks ago, flamboyant money manager Hugh Hendry was on Bloomberg warning that continuing floods of money out of bank deposits and into money markets could drive the Treasury and the Fed to lock people into their banks, adding, quote, I would recommend you panic. Meanwhile, Isabella Kaminska, a former editor at the Financial Times, tweeted that since we've now discovered that banks apparently don't hedge interest rate risk at all, which is now killing them, regulators may conclude that the only way to stabilize the banking system is to bring back bank frictions. Frictions here meaning make it difficult or impossible to withdraw your money. Kaminska predicts, quote, the next big thing in fintech will no doubt be friction tech or smart liquidity or whatever dumb thing they decide to rebrand lockups as. The background here is that since March, the Fed has become obsessed with such friction, putting out paper after paper worrying how fast bank runs have become. What took weeks, even in 2008, now takes days or even hours. The subtext is that the Fed would very much like to slow down or stop withdrawals. Saul Omarova, who was a Biden nominee as a top bank regulator, despite being a Marxist, even advocated setting up direct individual accounts at the Fed, which would effectively nationalize the entire U.S. banking system. Of course, with a CBDC, it would all be push button easy to chain the theater. Freezing assets, even seizing assets, can be done with surgical precision in real time. In fact, the Fed specifically cited bank run risk in their paper on CBDCs last year. But even our existing banking system has all these powers thanks to the Bank Secrecy Act of 1970 and the infamous Patriot Act, which delivered full ability to control where your money goes or does not go. Canada displayed that power last year, locking hundreds of accounts for supporting peaceful protests. Our government has the exact same tools, and they could be deployed in a bank run. So what is next? Since the founding of the Fed, Americans have been used as a piggy bank to bail out the banking system over and over. We are currently in the middle of one mother of bailouts, consisting of trillions in deposit guarantees paired with cheap loans on hidden bank assets that lost value. The problem is that all those bailouts don't actually solve the problem, which is that depositors are fleeing 0.2% bank accounts and moving their money to 5% money markets. That literally removes the money from the bank, which forces them to sell those crap assets, which breaks the game. That means the only solution is to cut rates. In fact, to slash them towards 0.2%. This the Fed cannot do, since it knows inflation would soar, which would drive Congress to take it over. So the Fed is out of options, and the last man standing is you. Final point on de-dollarization, capital controls would obviously also hit foreigners, who would also be locked in, losing access to their dollars. A supposed global reserve asset that you cannot withdraw would obviously be catastrophic for the US dollar's already draining reserve status. Okay, we'll be watching. See you next time.
So yeah, this is exactly what I've been talking a little bit about. During the time of a bank run, anything is possible. A lot of these things that he's talking about in this video where, they're freezing your bank accounts and they're freezing your money and your withdrawals, that is 100% possible during a bank run. They already have things in place to do that if it does come to that. And in my opinion, this FedNow service, well, that's the accelerant for a bank run, and a massive bank run at that. And talking a little bit about deposits, right? Yeah, they are down historically. In fact, we do see over here, banks report the largest ever quarterly sequential drop in uninsured deposits in quarter one. S&P, this was from June 15th, actually. Again, we do see that they mentioned Bank of America, Citigroup, and Wells Fargo reported drops in uninsured deposits as of March 31st as part of an overall sequential decline of 7.8% or almost $600 billion in uninsured deposits by all U.S. banks as of the end of the first quarter. This is absolutely wild. You know what's funny about all of this? Well, guess what? Over here, FDIC, US bank deposits dropped by most in 39 years to start 2023. And the craziest thing about all of this, right, is that if a bank run does begin to happen, the biggest issue, there's not enough liquidity backing these banks to provide the money that is there that's demanded in these withdrawals. So what's going to happen? Well, a bank run. And accelerating the payments and accelerating the withdrawals and the deposits, well, that only causes a lot more chaos in this system that's already catastrophic. So when we look at what's happening, do I believe that we are about to see this massive downfall of our traditional payment system? Listen, at this point, it's speculation. But it's very interesting to note that this FedNow system could very well be the key that unlocks the door for a CBDC system within the US. And by the way, I want you also to understand that banks already outside of the US have done these radical capital controls in times where they need to provide help for the elites and the traditional players. For example, the Federal Reserve staff is putting out research papers talking about bank friction, which means stopping people from removing their money from banks, preventing bank runs. It is basically capital controls. You should have alternatives outside of the banking system, 100%. You know, physical gold, silver. Physical gold and silver is crucial. I think everyone should have at least a little bit. Crypto, 100%. No doubt in my mind. Crypto is a big player. And then also outside of that, you know, I do think that people should be preparing for the inevitable, which is most likely we see hyperinflation at some point in time soon. So, you know, you want to stack up on water, food, you know, essential items that you need, because who knows how bad things will get. But I just want you guys to understand that things are getting very interesting around crypto and the banking sector. Do I think that a global bank run is going to happen around the US dollar? It's very well possible. Do I think that this is going to be triggered by the FedNow system? Again, very well possible. Is this the clearer sign, though? Is the herd following this narrative? At this point in time, I'm not too sure if most are focused on this. I think that a lot of individuals were focused on it back in March. Today, more than ever, I think that a lot of people are kind of ignoring the FedNow system, which I think everyone should be focused on the risk tied to it. Most people are still focused on how bullish it is for crypto and what it means for crypto. I'm actually focused on what it means for CBDCs. But banks already started to limit a lot of things happening around crypto, which is why I say, like, we need to make sure that we are taking the actions that are needed to make sure that we take our crypto off of these exchanges, very similar to money out of the bank, because I don't trust banks and I don't trust any crypto exchange. So you need to make sure that you are putting your money into any asset of your choice that you believe is going to be good. I always say with crypto, you know, you don't want to go all in. You don't want to put your life savings on the line, because again, this is still a very speculative asset class. But whatever you are buying, whether it be XRP, whether it be HBAR, whether it be QNT, whatever, you want to make sure that you are taking it off of all of these exchanges, and you want to make sure that you are cold storaging your crypto. That way, none of these players can touch them. But I do think that we should prepare accordingly to whatever may happen in July. But I do think that July is going to be a very interesting time for these markets. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. So that you all have a beautiful day or a beautiful night wherever you guys are on this. This has been Nick. Peace out, guys.